Welcome to the Chrisman Commentary, Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include MBS pool prepayment speeds, my interview with Ocrolus Rebecca Seward on how the company's redefining mortgage underwriting with its Inspect platform, enabling real-time condition creation and automated loan reviews to improve quality, reduce costs, and streamline operations for lenders of all sizes. And today brings the all-important CPI inflation report. Thanks to Ocrolus for sponsoring today's podcast. Ocrolus is transforming the mortgage industry with AI-powered data and analytics, featuring cutting-edge tools for automated indexing, income analysis, and discrepancy insights. Ocrolus is empowering underwriters to make timely, confident lending decisions. Whether you need to verify income across complex pay scenarios or review borrower documents with confidence, Ocrolus helps mortgage teams move at the speed of automation with the precision of human oversight. Learn more at ocrolus.com/mortgage. For mortgages, rates are driven by supply and demand, so investors watch prepayment speeds and new applications. Investors look at products, coupons, and states. Mortgage-backed security pools backed by loans from states around the U.S. are starting to catch up with the relatively fast pace of housing turnover shown by Florida pools over most of the last 2 years. Chalk it up to home price appreciation, where Florida prices have been flat since early 2024, while other states see steady gains. As home price trends seen at the outset of COVID continue to reverse, the turnover speed gap to Florida should continue to fade. Home prices in Florida have lagged the nation over the last few years due to HOA fees, special assessments, insurance, or the threat of climate-related weather events. Climate-related weather events. How's that for a redundant phrase? Florida homes rose about 5% in 2023 and have held roughly flat since the start of 2024, even dipping slightly in the early part of that year. National home prices, on the other hand, have increased about 10% since the start of 2023. Obviously, appreciation and depreciation factor into loan-to-value on homes, which in turn impact investor appetite for those loans. Switching gears slightly to the overall U.S. economy, it's driven by jobs and housing. Strong June jobs data has led bond traders to largely rule out an interest rate cut by the Fed at its upcoming meeting, with expectations shifting away from a July cut. Market confidence in a September cut is wavering and now hinges on the consumer price index data, which will be key in shaping future rate cut expectations. Treasury yields, in effect, after a stellar first half, are closely watching those inflation figures to determine if the Fed will resume easing. Of note, yields for long-term debt from Japan and Germany to the UK and France rose on Monday as growing concern over widening fiscal deficits hurt demand. The yield on Japan's 30-year notes jumped the most in 2 months, and those on similar maturity German bonds rose to near their highest levels in 14 years. For these countries, fiscal concerns are outweighing central bank interest rate policies as drivers of investor sentiment. While the sell-off is less pronounced in the U.S., 30-year yields here still touch their highest levels in a month. The week opened with bonds trading in a narrow range despite new tariff announcements targeting Mexico and the EU, where potential 30% rates start on August 1st. Investors adopted a wait-and-see stance ahead of this morning's June CPI report, and the report is expected to significantly shape views on inflation and Fed policy. While the market may appear largely unfazed by the ongoing trade war, it's still poised to be one of the most influential macroeconomic drivers for the remainder of the year. President Trump's use of tariff threats as a negotiation tactic has been a consistent pattern, and the latest round, set to take effect on August 1st, leaves a window open for potential deals before implementation. Even if the administration follows through on these new tariffs, there's always the possibility they could be rolled back quickly if agreements are reached, which may help explain investors' muted reaction to the recent escalation. For today's interview, I wanted to welcome to the show Ocrolus Rebecca Seward to discuss how the company is redefining mortgage underwriting with its Inspect platform, enabling real-time condition creation and automated loan reviews to improve quality, reduce costs, and streamline operations for lenders of all sizes. She's the director of product at Ocrolus, a leader in AI-driven document automation and analysis. With over a decade of mortgage lending experience, she leads mortgage-focused product development, aligning with cross functional, agile teams to craft product strategies and deliver high end digital solutions for the company's partners. In her role, she utilizes a strong foundation of software engineering and programming principles and the ability to diagnose, reproduce, and debug software issues. As listeners this week may have heard, uh, Ocrolus is pushing forward this wave of efficiency in mortgage, which is so nice to hear. It's going to help borrowers, it's going to help originators, it's going to help the entire cycle of a mortgage. Which I'm smiling over here. We don't air video, but I'm smiling. Yeah, I want to hear it from the horse's mouth a little bit, though. And kind of big picture, your mission in the mortgage space and how Ocrolus view the vision. Inspect is a big part of it. How that fits into this vision.
At Ocrolus, our mission is really to help lenders transform how they work by embedding powered products into the foundation of their day-to-day operations. So that starts with document and data processing, of course, but we're no longer just pulling data off of documents anymore. We at Ocrolus are actually starting to evolve into an analytics platform that is really powering intelligent workflow-driven processes. And Inspect, as it was just introduced, is really a huge part of that evolution. So we recently have restructured our company into industry specific business units so that we can really double down on our focus of developing mortgage workflows. And Inspect was actually purposefully built specifically for that space and specifically for the mortgage loan process. So it has been designed to align really with how underwriters think and how they work. And it's here to help make sure that files are accurate, that they're fully complete, and that they're really ready for credit decisioning. So that is what Inspect does right now for the mission of transforming into a AI-driven workflow product. But our longer term vision is actually really to start to become really the centralized platform where lenders operate. So it's really where the data integrity, the action to be taken, and automation ultimately converge.
Well, I don't want to skim over it so quickly here. Let's dive in a little because loan quality is so important. It's so critical in underwriting. Can you walk us through what Inspect does and how it's transforming that part of the workflow?
Absolutely. So, Inspect is really here to ensure that the loan file is accurate and complete before it even ever gets submitted into underwriting. So, it's a product that actually identifies discrepancies that exist between the Encompass 1003, so the system of record and the application data, and the document data that Ocrolus processed. And it's here to help really flag three different types of discrepancies. The first being just field level mismatches, right? Does the data as it was submitted on the application or as it was entered into Encompass actually match the data on the source documents? So that could mean a fat fingered social security number, or it could be a misspelling of a borrower's name or their employer. So, really helping with the integrity or the data quality itself. But it also helps to find things like missing documents where the borrower submitted something on the application. Maybe they have a bank account with PNC. You would expect to find a supporting document for that asset statement. So it helps find missing documents that are on your initial needs list for submission. And then finally, the third type of discrepancy would be where there's something on the documents that actually wasn't stated on the application. So, say, for example, you have a rental property that's on your Schedule E that was never actually referenced on the application. It can help identify things like undisclosed REO or maybe additional income that wasn't referenced on the application. So, really, by doing all of this more up funnel and up front, we're trying to help lenders avoid downstream surprises that could really impact the loan lifecycle. And it frees them up to really focus on what matters, which is assessing risks and making really sound credit decisions.
Yes, eliminating bottlenecks is going to be what gets mortgage to the future. And I love hearing that. It sounds, if I'm hearing you correctly, it sounds like Inspect can create conditions directly. Yeah, I don't want to skim over that point either. Why is that such a game changer for underwriters and processors?
Yeah, absolutely. So In the past, previously with the product, users would only view discrepancies directly in one system, and then they may have to jump into another system, whether that's the LOS or some other system of record. Now they can actually turn those insights directly into conditions with just a single click right inside of the inspect UI. So that really helps switching that an underwriter would normally need to take. And it also ensures that conditions that are being created on the loan are tied directly to the data and the documents that are triggering. It eliminates a lot of confusion that exists across the loan as well.
What's the actual user impact that we're seeing now that this is possible?
For us, hearing directly from our customers, the impact has been truly immediate. Users are starting to report to us that they're seeing fewer areas across loan team members and across the entirety of the loan lifecycle. Manually key in data directly into their LOS. They can just copy it from the source document and import it right in. And our interface, our platform is actually surfacing these anomalies in just a few minutes. And these are the type of things that it could take hours to uncover, it could take weeks or days to uncover. And underwriters, they're only human, or processors, we're only human. The stare and compare fatigue is really weird. You're often using multiple desktops and multiple screens to review all of these things. So we're kind of taking that manual effort out of it. And because all of it is housed just within one platform, we're allowing team members to actually work faster, be more accurate, reduce risk. And that is helping our lenders scale much more efficiently without having to sacrifice quality or cycle time.
And I don't want to belabor the point too much, but it's transformative in the sense of this helps fix a lot of what ails the mortgage industry. Rising loan costs, shrinking margins, tighter compliance standards. Can you speak slightly more to just how transformative this can be, why this is helping exactly what companies need right now?
Of course. Look, I've worked in this industry for well over a decade now. We all know that it's a very seasonal and cyclical market, and the ebbs and flows are constant. So we're seeing loan costs rising, we're seeing margins getting tighter, and there's more and more scrutiny on compliance and reducing risks, and business owners are trying to figure out how can they actually scale more effectively. So when you introduce a product like Inspect or an automation tool such as Ocrolus to really help streamline a lot of your day-to-day workflow and identifying early detection of issues, that means that lenders can actually shorten their cycle times and reduce the cost per loan. So it helps standardize really how issues are identified and resolved. It helps standardize the workflow and the process that real humans are making. And all of that helps to reduce risks. It improves the auditability of what is done on each loan file. And it ultimately helps lenders avoid those costly errors that could eventually result in a loan buyback or a fair lending issue that could incur products that enable our lenders to do more with less without having to compromise quality and level of service.
I got to ask, what's the feedback been like from lenders out there, clients of yours so far?
It's been really great. It's been really positive. We had an early beta feedback program where we launched this product with a bunch of lenders and took feedback directly from real underwriters, real processors, real team members to understand how it's affected their workflows. And some lenders have reported seeing up to a 75% reduction in the number of underwriting touches, which is just a huge, huge number. And others have told us that they're actually able to double their throughput, again, without having to actually increase their headcount or add more team members to be able to handle that increased volume. So they're not just viewing Inspect as really a data validation layer anymore. I think, as I was saying before, they're actually truly starting to see it as a real workflow engine that can help their teams act with confidence, improve speed, improve quality. And yeah, we're very happy and thrilled that the feedback has been overwhelmingly positive so far.
Has it been that it's worked better for certain team sizes or workflows, or it was built to work across a variety of tech stacks, philosophies, those sorts of things? I got to ask.
Yeah, of course. Well, As we do with any product that we build in our roadmap, everything is kind of led with research. So we did a huge project where we had interviewed companies of a bunch of different sizes, a bunch of different teams and different roles that worked with different tech stacks. And I think we're just constantly trying to engage with lenders across all of those models to really understand how we can build a product that is hopefully a one size fits all. We have customer advisory boards, we do one-on-one interviews, we do early adopter programs, beta programs. And so our goal is really to just try to solve the universal problems that exist across all of those different team sizes and tech stacks, and solve it in an agnostic, very scalable way. And that's what we did with Inspect. It's what we do with all of our products, where it's flexible enough to really fit into any customer. It's built to fit into any tech stack, but it's also powerful enough to deliver consistent value across all various types of workflows.
That's cool to hear because I know Ocrolus works with a wide range of lenders. So I'm going to ask three more questions. We're going to go far out into the future, a little nearer term than today. So for my far out question, conceptually, how does condition tracking, especially in Inspect, set the stage for automation and smarter workflows as we move into the future of mortgage?
Platform where actual processors, underwriters, or any loan team member really can interact. And I think now that we're able to track the insights that our teams, our customers are engaging with, and we're actually able to see what sort of insights become conditions, we are really starting to generate a learning engine that is collecting a lot of really rich training data. And that is the type of foundation that we need to build something smarter and more agentic. Tools that not aren't just detecting issues, but they're actually understanding what humans do to resolve those issues. And over time, after seeing enough loan team members interact with it and start clicking on it, we'll actually be able to learn from their behavior and hopefully eventually try to replicate that behavior. It's exactly the same concept, actually, of our human in the loop model with our document processing. We've used this model successfully where we are using a combination of AI tooling and humans to get smarter and better over time. And we're learning through human behavior to train the models to be more predictive. And that's exactly how we're going to apply this to our conditioning solution and all of the other workflow tasks that we're building out. It's going to be how we eventually automate more and more of the underwriting process, but we're going to be doing it incredibly responsibly, but intelligently through learning through our human underwriters.
Yes, the agentic potential is really phenomenal of what it can do in terms of changing the process, in terms of freeing people up to work in other ways to be more productive, all those sorts of things. It's really neat. So let's zoom in a little bit. The next year and a half, 12 months, 18 months, biggest opportunity for technology to impact underwriting efficiency and risk mitigation that you see?
Yeah. I think we're going to see a pretty clear divide emerge very soon here. I think we're going to see that those lenders who are actually a little bit more tech forward, who are leaning into how they can leverage automation and AI to close loans in days and not months, being able to scale volume with fewer people, are really the ones that are going to be leading the way. And meanwhile, I think there will be sort of those legacy lenders who are still taking a long time, maybe, 60, 90 days, and relying heavily on manual processes and increased headcount. And so I think the real opportunity right now is to bridge that gap even further. So we just want to be able to help more lenders shift into that automation mindset without having to lose full control or lose the level of human oversight we feel is necessary, especially because a loan application is just so nuanced. There's so much variability across different lender or borrower profiles, different loan programs, et cetera. So our opportunity is really in leaning into those tech forward lenders to help them scale. And at Ocrolus, we really truly see ourselves as a leader of that technical transformation. I think we're seeing lenders who are adopting our products every single week, and we're seeing great success stories come out of that. And we're really just excited to work alongside the industry to make experience for their customers who are ultimately borrowers. We're really passionate about ultimately providing a borrower experience because many of us at Ocrolus are actually homeowners, and I think we see it from all angles. So that's what we're really here to support.
Yes, and I love that phrase, automation mindset. It's so critical in today's day and age in the mortgage industry. And you would think that we are on the cusp of lenders being left behind if they're not at least having that mindset or trying to adopt new technologies. It is going to be the haves versus the have-nots, and I don't want to know where the have-nots will end up. Let's close with this. For companies that want to adopt this automation mindset, what advice would you give to lenders out there that want to modernize their operations, but they're struggling to move beyond manual review workflows?
My advice to them would be to start small, focus on tools that could complement your team rather than entirely displacing them. I think one thing we learned through our research was that there is a real fear of displacement. And I think that's totally valid. And I think my advice would be to find a solution that actually kind of augments existing workflows or makes someone X amount more productive or shortens cycle time by X amount. And I think the most successful lenders are going to be using AI to actually amplify their people and not replace them. So I think I would also suggest that you make sure any tech partner you get involved with, whether it's Ocrolus or others out there in the space, you want to make sure that they truly understand and value your business. All again, without having to sacrifice quality. Of course, reducing cycle times, but not just focusing on that. So start small, start today, and really take your time to see what's out there and find a partner who really wants to work with you to be successful.
Very sage words, not just in closing there, but this entire interview. It's enlightening to hear what companies are doing. I wish you the best of luck at Ocrolus, and thank you very much for making the time.
Thank you. I appreciate your time as well.
Economists have consistently cautioned that tariffs could eventually drive U.S. inflation higher, and today's Consumer Price Index report for June may test that theory. For the past 4 months, inflation readings from the Bureau of Labor Statistics have been softer than expected, but many analysts now anticipate a pickup in prices. Joke's on you, because that didn't happen. Especially in categories like furniture, cars, toys, and recreational goods that are directly affected by tariffs. Both Federal Reserve officials and private forecasters generally agree that inflation is likely to rise this summer, as businesses begin passing higher import costs on to consumers. While some companies had initially managed to blunt the impact by stockpiling goods or accepting smaller profit margins, those strategies appear to be reaching their limits. Today brought the all-important June Consumer Price Index, and headline CPI was up 0.3% month over month and 2.7% year over year, exactly as it was expected to be. Core, excluding food and energy, was up 0.2% and month over month and 2.9% year over year versus expectations of rising 0.3% and 3.0% versus 0.1% and 2.8% previously. You got all that? Basically, it was a benign inflation report, and markets aren't moved in either direction. Other releases today include real earnings, New York Fed manufacturing for July, Redbook same-store sales, some short-duration Treasury auctions, and remarks from no fewer than 5 Fed speakers. We begin the day with agency MBS prices unchanged from Monday night, the 2-year yielding 3.89, and the 10-year yielding 4.40 after closing yesterday at 4.43%, after CPI came in as expected. Let's wrap up with a joke and some housekeeping. I hate it when I can't figure out how to operate the iPad and my tech support person is asleep. She's 5 years old and it's past her bedtime. Thanks again to Ocrolus for sponsoring today's podcast. Ocrolus is transforming the mortgage industry with AI-powered data and analytics, featuring cutting-edge tools for automated indexing, income analysis, and discrepancy insights that empower underwriters to make timely, confident lending decisions. To learn more, visit ocrolus.com.